Now who needs more financing and funding in your business? Who would need more money? You need more money? You want more money? Raise your hand. This is what the panel we're going to talk to next is going to discuss. We have great panelists, Chris Smith from Regional Lending Manager of North Texas PeopleFund, Lucinda Vela, the Senior Certified Business Advisor at University of Texas San Antonio Small Business Development Center. That's the SBDC. And we have Leticia Tish Perez, Regional President for Securities State Bank and Trust. So you have your local bank here and banker. And then our wonderful panelist who is an expert in finance. She's also my vice chair and co-chair at the Women's Commission. We have Amy Henderson all the way from Amarillo, Texas, and Amarillo State Bank. She's the vice president there. Thank you.
What a great afternoon we have had. We have learned so much today. I'm excited to kind of end today with this. I personally have a team back in my office, and I'm writing down notes on how to do personal branding, how to do social media, just so much information today. So I'm so thankful that I get to be here, and also to end this stuff with finance and funding. I personally am a business banker, and I'm very passionate about women business owners, and access to funding is so important. And I just want to remind a lot of people that bankers are not scary. We are not scary, but we do have to manage the bank's risk, and there's certain things that we expect from you. And we have a great panel put here together to help you how to access that funding either through a bank or some other avenues. So I'm going to let each of you introduce yourself, talk about what you briefly do at your institution, and then we'll get into our questions.
Hi, I'm Tish Perez. I work for Securities State Bank and Trust. I'm a regional president. I've been in banking for 30 years. 25 of those years have been with Securities State Bank and Trust. Our bank is family owned since 1941. We have 18 locations. Our main location is here in Fredericksburg, Texas. And we have locations all over the Hill Country, Austin, and North Texas. We specialize in all of your banking needs. I'd like to say that we are small enough to still know your name, but yet large enough to help you with any of your needs.
I love that. I'm just saying that. Okay. My name is Lucinda Vela, and I'm a senior advisor with the Small Business Development Center. And my passion is hoping to help small businesses to develop, start up and develop. So I appreciate being here, okay? And any questions, let us know, okay? Go ahead.
And my name is Chris Smith. I'm the Regional Lending Manager for PeopleFund. And PeopleFund is a bit unique. It's what we call a Community Development Financial Institution, or a CDFI. So we're a community lender. We don't do any banking. We don't do any cash management. It's just strictly small business lending, and it's strictly here in the state of Texas. So we have 10 offices around the state, including Austin, San Antonio, and all we do is work on financing startup businesses and fairly new businesses that are looking to grow. Love what I do. I've been doing it for about 20 years. I've done it in big banks. I've done it in small banks, and when the opportunity arose to come to PeopleFund, I didn't just stick my foot in the door. I wedged my entire body into it. I was like, I want to do this, and it's such joyful work, and it's so much fun to do what we do. So excited to be here and excited to share some extra resources with you guys today.
So let's get started. So Tish, if I am a business owner and I want to apply for a business loan, what do I need to know before I meet with you?
First, I want to say that the growth panel killed it. You need to know your banker. Your banker needs to know you. When you come in, you want to know your need and understand what your need is. You need to have a plan. You need to make sure that you know how you're going to repay it. You need to come prepared with your financial information. For those of you who are thinking, I don't have financial information, I'm too small for that. You're never too small. It's important to have a balance sheet and an income statement at the least. If you don't know how to do it, as a previous panel said, Google is your friend.
And then what about you, Chris, if a customer wants to come see you?
And actually, Google's not your only friend. We actually are as well. Part of what we do as a CDFI is we provide complimentary technical assistance. So if you need to sit down and you're just like, I don't really understand how to make this business plan hum, or my projections don't jive with what I've been told the industry should look like, we can do those things free of charge, and you're not required to come get a loan with us. And it's something that we do in partnership with many fine banks like these guys, and along in conjunction with the SBDC as well. What I would say to the question about preparedness is look at it like a job interview. You're going to go dress nicely, you're going to be prepared to speak eloquently about yourself, and you're going to have a dusted up resume. The resume is the financials and the business plan. You don't go in there and just kind of unprepared and not really know how to explain yourself, because you're selling yourself to them. You want them to know that you're ready. You want them to know that this thing is going to work, and you need to be able to pitch that to them. So,
Well, now, Lucinda, how does a small business development center prepare new businesses or existing businesses to come see a banker?
Okay, so the first thing we always talk about is putting together a business plan, okay? A business plan not only gives you a map of what your business is going to look like, but for either, of these types of organizations and others and banks, you have to show what your map looks like. What is it going to look like year 1, year 2, year 3, okay? And what are my financial projections? So these are the kind of things that we can assist you with. I have these in my hand because guess what? I want y'all to know it's hard. It's not an easy thing. So these are some things, some examples, some resources that we have to help you all so that you can be prepared to meet with a banker, to meet with a grant or funder. And but the most important thing is you have to be prepared.
Very good. Do I need good credit? And what's a good credit score that you're looking for to approve a loan? And if you don't have a good credit score, how do you improve it? And I think that goes to everyone.
So traditionally at a bank, yes, the answer is you need a good credit. If you're coming to us and you're trying to get a loan, yes, we want you to have good credit. There are credit repair companies that can help you. If we're talking about a period of time, if we're talking about maybe you had a medical issue in your family and you got that hospital bill and it was way more than what you thought a clinic should cost you, that is a period in time. If you have a reoccurring problem that continues, that you might want to stop and have a repair company work with you so that you can repair your credit. The issue with personal credit compared to business credit is most banks traditionally require you to personally guarantee your business debt. So you're not getting away from it by trying to get a business line of credit or a business term loan. Your personal credit still is going to affect your business credit.
And I agree with that. Normally, I think the thing that a lot of people need to understand is if you're going for an SBA loan, the credit that they want to look at is usually going to be about 650 and above, okay? So if you're looking for an SBA loan, you're going to have a higher credit line or a higher credit, okay? So keep that in mind when you start looking at applying for different loans and stuff like that. Commercial loans, a little bit different, and it will depend on each bank, right? So, okay.
And I think it's a little different at a CDFI than it is a bank. So we have the luxury of looking at a situation. So if I see a 580, it's not a done deal right there. It's tell me about that. Let's talk about it. I can look at a credit report. If situations happened in life, like a family member, a terminal illness, there's a lot of things that have a story behind them, and we try to digest those one-on-one. But if I see somebody where there's consistent pay habits, where it's just not a priority over time, I can tell that by 20 years of looking at this. And what you have to remember, guys, is that the reason that you're personally guaranteeing these loans in the infancy and the early stages of your business is because you are your business at this point in time. And so the habits that you reflect in your financial life to a lender, you may well reflect those as you run your business. So it's important to not just tag a credit repair place, but let's sit down and look at the habits. Is there some way you could change some of the things that you're doing, or was it just a one-off? But I think you have to have that mentality because, again, you are your business, and you've got to understand that we look at it that way too.
Great answer, Chris. As we look at, the whole reason, the bank wants to lend money, but we also have to manage, it's not our money, it's your money. And we want to manage that risk. So if you don't have a good credit score, we want to make sure that you're not going to take money out of the business that we're lending to take care of your personal stuff. So we look at the whole big picture. So it's very important now to have a personal growth score, and if you have issues, to get with the right people and get those addressed before you apply for a business loan. With that, you know, a lot of times with small businesses, when they start up, they bootstrap. And then can you all give a definition of what is bootstrapping? And are there advantages or disadvantages? I'll start with you, Lucinda.
Bootstrapping, wow, I'm sorry, you know, and I am from Texas, but, so I'm assuming this has to do with, go ahead.
Mostly using your credit cards and borrowing for money. I mean, like, you're just scrapping money everywhere you can to bootstrap your business.
Yeah. And you know, you need to make sure, again, if a bank's looking at you, they're going to look at your personal, they're going to look at your business, okay, where you're at. Bootstrapping is kind of like, you know, it's like, I've been using this credit card and that credit card and this credit card and that credit card. I would keep your personal bootstrapping, can I say that? Yeah. Your personal bootstrapping in one line, and then start doing your business credit and what you're trying to do with your business in another line, okay? I think you have to keep it separate. Now, it doesn't mean that a bank's not going to go, how has your personal, you know, stuff been, right? Been going, but I think you really need to try and separate the two. And when you're serious and you're going to go, you know what, I'm going to start this business, you need to keep it separate from the personal. I hope that helps.
Mm-hmm. She is 100% correct. That would be one of the, if you take nothing else away from today, separate out your personal and your business debts and credits. It's important. It makes your life a lot easier as you continue to grow.
And just to kind of build off the bootstrapping piece a bit, you have to sit down and figure out, like, not only where you want to be in 6 months, but where do you want to be in 5 years. You take every single penny that you have, you've cleaned out the couches, you found all the shiny nickels and all that good stuff, and now you don't have anything left in the bank account. And 8 months later, it's like, now I've got this opportunity for this big contract, and you're like, I want to go to the bank, I want to see if I can do something, I need more capital. You don't have any money, and that's part of being prepared and understanding. Google is your friend. We're all your friends as well. Understanding how the game is played and understanding some of the components of what makes you loan ready and quite frankly, loan worthy. We look and we need to see that you have some capital. You know, you may not need to have all of what you need to borrow, but we need to know that you have something there. And sometimes for certain types of loans, there's a certain percentage of your total project scope that we need to have you either have on hand or have already spent on the project. So be mindful of how you leverage yourself as you grow, because quite frankly, most businesses have what they call a leverage ratio in their industry that's okay. It doesn't mean it's bad if you borrow money. You just have to sort of have your roadmap and your plan and stick to it and understand, hey, it doesn't make sense for me to use all my own capital now. I need to leverage some of somebody else's. So
that's a good segue for you, Tish. When you're looking at an application, what are you looking for?
I loved the growth panel because they hit the nail on the head. An application, when I receive a commercial application, it's very limited information. What works best is that you have made an appointment, you have come in, you've talked to us, you've told me who you are, you've told me what your business does, why it's important, what it does for the market, who are your customers, who is your competition, do you have enough staffing? Do you see a need that maybe you have too much staffing? I mean, there's so many things about your business that as a commercial lender, I need to know so that I can help guide you through the process. Don't just submit an application with a bunch of papers. Come in, talk to your banker, understand them, have a relationship with them so that they can help you through the process.
Yeah, and this is where we can come in handy, Small Business Development Center, okay? Because she's going to go, do you have a business plan? And they're going to go, no. She's going to go see SBDC. Let's work on a business plan together, okay? And we're going to put all of that together and then couple with what the application process looks like, what we can do to help you. Same thing on this side, right? so that you're better prepared. So when you go in, whether it's over here, you're going to be better prepared. But you have to be prepared. That's the whole thing. And so SBDC can do that at no cost. And you know your business best, but at the same time, we're going to be your sounding board. Does that make sense? So we're going to be your sounding board to make sure you have everything together, and then that will go along with whatever the application processes are. Does that make sense? Do y'all have anything to add? You want to add to that, Chris?
I just want, today is about resources and you guys taking away things that will help you. The SBDCs, and that's what the Small Business Development Center is the SBDC. So when you hear that now, you know what it is, find them and use them as a resource. They do amazing work. When we get a package from these guys, it's good, it's ready, and the chances are somebody's walking away with some capital. So take advantage of those resources. Just to quickly say about what we look for, on a high level, if you're a startup, we are looking at, I want to see your credit. I also want to see the viability of the business. So that plan and those projections are really important. But we're going to be looking for something called a secondary source of repayment. Because again, the business has no sample size except for those projections. Could it work gangbusters like that? Yes. What if it doesn't? We need to make sure, and then there's all kinds of fund ratios that lenders use, but we have to consider your personal situation, your personal external income not related to this business venture, and meld all that together and take a look and see, is this a sensible request? So it's important for you guys as budding entrepreneurs to know that. Once you get past 2 years, it's different in how we look at your business's income. The sample size is large enough that we can consider it as a reliable source of repayment as well. So those are things I would encourage you all to look into more so that when you go to the table, you're more prepared for what you're going to be asked and how to deal with the situation.
That is a great response, Chris. As a business banker, we're the last people. You want to build a relationship with us, but when you have a loan request or you have an idea, typically we're the last people you want to talk to. You want to go ahead and put together your business plan. You want to really put the work in, and then you have that business plan. Once you have that business plan, you can shop your idea. Because every bank's a little different, especially on the commercial side. There's some appetites for more things than others. My personal bank, we tend to stay away from bars and restaurants. Doesn't mean we don't bank to them, but that's just a segment of the market that we tend to stay away from. But over here at Security, they may love that. But so with that business plan, you may you may love that. So it's really, really important to have that business plan. But in that business plan, how important is it for businesses to really understand their cash flow?
Well, God, my goodness, yeah. So that's a really big thing because, the business plan is going to map out how you're going to do your business. It's going to show year 1, year 2, year 3, hopefully, when you're looking at possibly applying for a loan or a line of credit, which we're going to talk about, right, which is cash flow, okay? But that's going to be all necessary, okay, to make sure that you can move forward. Okay, so she's talking more specifically about cash flow. So cash flow is extremely important because, hey, look, we have month. You know what? I got great sales this month. Ooh, the next month, right? Right? Do we all? Who all has done that? That's right, right? So you have to have good cash flow. So these are wonderful people to work with, and we can help you too, but you have to really map out what that's going to look like for you, okay? Because every month is not going to be the same. So you can work on a business plan, right? Looks great, right? But you might have peaks and dips along the way. So cash flow is extremely important. Cash flow, you can do what we call a line of credit. And I'm going to let these wonderful people talk about it because that's not my area of expertise, but I do know that a line of credit can really help you with your cash flow. And it's not like having a credit card. It's very different. Can you answer to that, or do you want him to?
I think that's a great segue. I think it's really important for you to understand what your cash flow is and be able to share either with your profit and loss statement or your balance sheet, show what that cash flow is and really understand it. So when you come into a bank or a different financial institution you want a loan, you want to be able to tell your banker, you know, I'm having a hard time the fourth quarter of the business because my sales are slow, and I think I need some cash, some type of loan to help with that. And so with that, you know, what type of loans do you offer to help the cash flow? And then Tish too, with the, you know, do I need collateral? Do I need equity? What is that? What is equity? What does all that look like? That's like 10 questions
loaded
in one
question,
thing.
right?
It's a lot.
Well, first of all, I want to make sure that everybody caught in the room that cash flow is shown on your balance sheet. So if you don't have a balance sheet, you don't know your cash flow. So that's why we go back to it's very important for you to have a balance sheet and an income statement at the minimum. So a line of credit, it ebb and flows with your cash flow. So you would have let's say we have a $100,000 line of credit. You're going to pay interest on it monthly. When all of your money comes in because maybe you sold a bunch of stuff at a market, that money comes in, you're going to reduce that principal back down, and they're going to start that process all over again. That's how a line of credit works, and it works really well for people that have ebb and flows in their business.
And just real quickly with cash flow, when we present on this and we talk to people, it's like we get antsy and our faces get red. And you can have a profit and loss statement that's just like, look at these beautiful sales, but maybe you have a contract with a big business or a government entity and they slow pay. Well, you never get to realizing how beautiful that P&L statement is because you're out of business before you get to that point, because you don't have the cash flow right now to pay for the expenses to perform the services that you need to make your revenue. So understand that just because it looks pretty on the P&L statement, that cash flow statement, understanding your cash position and being in a position to play out eventualities that may occur, you've got to think that through, or else the best laid plans, your business will be out. So the line of credit is a key player in that. Unfortunately, as a small nonprofit, we don't offer that. There's a lot on the back end that goes into servicing those. We strictly do term loans. I kick and scream like a small child whenever they talk about new products because I want that. And eventually we'll have that. But it's huge for seasonality, for slow paying contracts, things like that. So, and a lot of times they offer features like an interest-only payment so that you can keep more cash in that moment if you need it. And then when the time comes and you've been paid for things, then you can really chuck away at principal and knock that thing back down to where it needs to be.
It's a helpful thing to have, not necessary, but a helpful thing to have depending on when you put your business plan together and then you're looking at the first couple of years how you're doing. So.
But also add, don't wait until you need it to go get it, because then it's going to be a lot harder.
I like this guy.
So.
Yes, I like this guy. He's right.
So what is a term loan? What do you use a term loan for, Tish?
So I'll give you an example of a term loan. If you own a flower shop, you need a new van to make those deliveries. That is something that you would want to put on a term loan. You would not want to use your line of credit to buy a van. The term loan is usually like, let's say it's a 5-year loan and it's paid out on principal and interest.
So typically a line of credit is for your short-term cash flow needs, and then your term loan is something that you want to pay out on a monthly basis up to, a 5-year note, like a van or something like that. Next question. So Chris, what is SBA? What does the SBA do for small business?
And I know these guys are here somewhere, so we love them. We all love them. If I'm right, in 1953, the government set out the SBA because a lot of times lenders were not willing to come out and play ball, and let's just be honest. It's been all of us. There's times where it's difficult. And so to spur small business growth and get lenders to support the growth of mom and pops all around the country, the SBA came about. It's important to know that the SBA is a support tool for lenders. You're not borrowing in these cases from them. You're borrowing from us, and they're providing, in essence, a safety net for us. If you come to me and you sell me an idea, but I have to take 100% of the risk, that's one thing. But if I can like your idea and then I can do the same whole thing and only take 25% of the risk, naturally, which one am I going to choose? So what that does is it's a beautiful thing because it spurs everything that we're thinking about here today. 9/10 of your businesses probably don't go without the SBA. So we're really appreciative of what they do, but it's understanding how the game is played and what role they play in the process. But they're a beautiful player in this.
So Tish, is is Security State Bank a preferred SBA lender?
We are a preferred SBA lender. I will tell you that I know enough about SBA to be dangerous. Our expert is right here in the front. Dana, if you'll raise your hand. We can do an SBA loan 7A, which means that it's not tied to real estate, up to about $5 million.
And does I'm just one quick.
No, I just want to thank SBA, okay? SBDC is supported through grants from SBA, and we love working with them. We work together with them on everything. So Small Business Development Center, again, is supported by SBA, and I just want y'all to know that. And so we work very closely with them. SBA loans, you know, whether it's 7A or you know, having to do with the you know, construction or whatever. But y'all have been wonderful for us, and we're going to continue working with y'all. So, you know, anyway, I just wanted to say thank you.
Do you help customer prepare for, because, you know, SBA loans can be overwhelming a little bit. There's a lot of paperwork that goes well. Do you prepare customers to fill out an SBA application and put documents together?
So when we're working with clients, the first thing that comes up with me is, where are you all at? What kind of business? Are you a startup? Are you an expansion? Let's talk about SBA loans first, because they have the best ratings. I mean, they just do, right? Whether it has to do with construction or operational, those are the first conversations that we have. And so we ask all the questions, what is your credit like, okay? Have you defaulted on any loans? Those kind of things. So those are the first questions we ask at the very, very beginning, so that we can continue. And like you said, it has to go through a bank, right? So they realize that, they know that. But anyway, we do keep in touch with SBA. I'm in San Antonio, so we have our contact over there in San Antonio. But they're great support and have helped a lot of our clients, honestly. I mean, just a lot.
So Chris, in my bank, we don't participate with the SBA programs, but I have customers that are potential SBA customers. I send them to my local Lift Fund. So can you talk to me a little bit about SBA microloans and the SBA loans that Lift Fund does?
Absolutely, and I think it's important to understand, guys, the SBA, the reason we may have different documentation and it may take longer is because there are certain things that we have to do to satisfy what the SBA needs to make sure it's a prudent loan, and we're really diligent about that because we need that guarantee behind it. So whereas a bank that may say, hey, we like this deal, we can work it and make it work for our risk, without the SBA, it may look way different. It may be a lot more streamlined. It's just a whole different process. And that's where a lender will walk you through that and walk you through options. Other CDFIs, like Lift Fund and BCL, and there's so many, I would encourage you guys to go to cdfi.org and look and find out who they are. We play very well together. If I don't have the product, but I know that you need it and I know Lift Fund has it, I'm calling up Lift Fund and saying, hey, can you guys help them? The same thing if I know that you've got the pieces in place to be bankable. I don't get my hand slapped by my boss to send you to the bank. I get rewarded for it because it's like, this is what we're here for, is to make sure that you're in the best situation. And we want you to have the best debt service, the lowest payment, and the best interest rates. So to make sure I didn't talk myself out of the question,
Can you talk to me about microloans?
Yeah, the micro loan, and so, and I did talk myself out of the question. I'm quite good at that. So CDFIs were given two specific products via the SBA. One that mimics a 7A loan. We call it the Community Advantage Loan. It goes up to $350,000. It's important to know that this is your standard startup loan like the 7A. If you want to open up a strip mall store, you need leasehold improvements, you need equipment, you need inventory, you need working capital for labor and marketing. That's the type of loan that you're going to look for. And so we do those for folks all the time. Ours is structured a bit differently. Again, it caps out at $350,000, whereas the bank can offer something much larger. The microloan is the other product, and this is a really cool thing because it's very unique and different. It's going to go up to $50,000. The maximum term is 72 months. At PeopleFund, we cap it at 60 months. It's not really our money, so we're kind of looked at as an intermediary. The SBA provides essentially a pool of dollars that intermediaries like us as community development lenders can go in and say, okay, We're going to use prudent and consistent lending practices according to what the SBA wants, and we're going to judge if you qualify there, and then we can give you those funds. So it's a really neat program. I would encourage you guys, look up some CDFIs, reach out to us. Even if we're not the ultimate one that's financing you, we're happy to answer questions to get you to the right place.
Thank you, Chris. You know, if you're thinking about starting a business, there's a whole bunch of different entities. You can start as a sole proprietor, you can start as a partnership, an S Corp, a C Corp. I mean, it's just overwhelming. Lucinda, does the small business development help with that?
Yeah, we can help y'all with that because, I mean, I get calls all the time and I'll have people, I'm going to do a C Corp or, and multiple person, and I'm going like, okay, are you the 100% owner? Oh, yes, I am. Okay, right? And I'm going like, no. So what I do is I will talk through, anyone who contacts me, I will talk through with them. What do you need? What do you perceive that you need? Do you even need an LLC? The LLC is the limited liability, okay? That's very important because that will protect any company from anybody trying to sue them and them going after personal liability, okay? So that's the first thing we talk about. We also talk about doing business as, which is a DBA. So I go through the whole process. What sounds the most familiar with you? Now, I'm going to state something because I don't want to spend the whole time talking about this because I could go on and on and on, okay? Which I do. But the one thing that you need to understand, though, too, for if you're a business or you have clients who are businesses, okay? There is something that you need to be aware of, and that is when you sign up, regardless of whether it's an LLC, sole proprietor, whatever it is, okay? If you are a woman-owned business, veteran-owned business, minority-owned business, whoever is that person needs to be 51%. Who knows that already? Oh my God, I love you guys. Y'all know that. Okay. Because if you're going to be registered as such, you have to be 51% ownership. That will allow you, as an owner, okay, to take advantage of grants, to take advantage of certain loans, all right? So I know y'all love your husbands. Did I just say that? But if you're the woman owner of the business, sorry. But if you're the woman owner of the business, you take 51%, okay? Or if your husband is the veteran, let him do the 51%. It will allow you to take advantage of certain grants and loans, okay? So I don't want to go into the whole thing about how you should classify yourself. But get in touch with me. I am happy to send you charts and information that will tell you this is why you should do an LLC, S Corp, C Corp, okay, whatever that classification is. Most of it, you guys, just to let you know, has a lot to do with taxes, okay? So contact me. I'll give you more information and talk a lot more. Sorry.
Definitely. And you definitely want to talk to your attorney and CPA because there's also liability issues and there's tax issues. It's a whole big thing. But to get started, I definitely recommend visiting with the Small Business Development Center. But when we're talking about partnerships and different entities, Tish, do you look at those applications differently if it was like one person coming in? So if it's a sole proprietor versus a partnership that's an LLC scheduled, filed as a partnership, do you look at those applications differently? It gets a little more complicated.
It gets a little bit more complicated. We want to make sure if it's a partnership that there's a good, solid agreement that's in there to protect both parties. If it's sole proprietor, then we want to look at the overall because that's really just one person. Yes, to answer your question, we do look at them individually and separately.
And that's where the contracts come into play. So if you're gonna partner with someone or whatever, please go talk to a lawyer, right? Can I say that?
Absolutely.
Okay.
I cannot tell you how important it is. Your very best friend that you've known since the first grade, when you are a partner, is no longer going to be your best friend. I promise
Even
you.
your husband, I'm just saying.
Having a
Your husband.
strong buy-sell agreement is definitely, because usually partnerships are good for two things, dancing and loving. So, so that's how come you want to make sure you have a good partnership agreement put together. But when partners come in, Chris, and see you, do you look at them individually or do you look at the whole big package? I mean,
And that's a good question. We look at it from both perspectives. I think to echo everything, this is about resources. And I heard somebody in another panel saying, get the right expert in place. That is, a lot of times it can be it can be an attorney, a CPA, a tax attorney. But looking at these deals, you have to understand, if you come to the table with 4 other owners, they may be bereft with cash and it looks so amazing. But then we start diving in. Well, this guy's got 8 other businesses and he's leveraged with every single one. And it's like, we need to know those things. So as it gets more complicated, it can weave itself down a path that you may have thought, I never thought that it was going to go this way. So you need to really understand who you're getting into business with, because it's a pretty serious arrangement, and it can end poorly if you don't do your due diligence up front.
so we have time for one question. Anybody out there have a question for us? Oh, come on.
Come on.
Scary.
Can I say one thing? I brought this up here on purpose. I haven't been looking at it, believe it or not. I guess my point is, there's so many resources out there. These are just some of the resources that we provide. So I just want y'all to know, regardless of who you're going to talk to or be in touch with, get in touch with everybody, because they can send you PDFs and links and all that kind of stuff. That's why I brought this up here. I've got some really good information up here. Just get in touch with us. We'll send it to you again, no cost. So just want you to know. Oh, and we have a question.
First of all, I just want to thank all the presenters. Today has just been amazing, and I want to thank the North Lake Travis Chamber of Commerce for inviting those of us business owners to participate. So that said, I will possibly direct this question to Chris, because you're the one that mentioned it, but if y'all have other things to contribute, I hopefully won't be the only one to benefit from this answer. Chris, you had touched on the 2 years, and my business has only been open 4 months. So with all the due diligence, all the business plan, all the good credit that I have, it's still hard because it's a brand new business. I kind of have 2 questions. First of all, when you're talking about the 2 years, is that when the business was established or when it opened the doors for cash flow? And second, what other advice would the whole panel have in addition to the plan of repayment and the viability? Thank you.
That's a great question, and I think keep in mind every lender can go a little differently at this. The 2 years is kind of a standard, and it's to give a reasonable sample size. There are times in a CDFI that I'll fight and go to our underwriters, and Lord, I know they hate it, but it's what I'm passionate about, and on my team is I might say, look at these 8 months of revenue, look at the bank accounts, look at what's flowing in and out. This is happening. These people are making money. She's paying a staff. It's like she may have a contract or some contracts that are about to happen. It's like, this may be worth a chance here. Like, how can we do this? Oh, wait, they have some other strengths. Maybe there's some collateral we could hold to mitigate some of that extra risk. But what we're really going to look for then is if you're immersed fully in your business. Sometimes I tell clients, you need to try to burn the candle at both ends for a bit if you can. If your business model dictates that it's possible. Don't just quit the job and go, I got this thing tomorrow. Ease into it if you can, so that you can leverage that income as you build the business and you build the track record. If that's not possible, then almost any lender, even us, we're going to have to fall back on, do you have someone else that has an external source of income that we can consider to help strengthen this? And then it goes into a lot of math. If somebody makes $10,000 a month and you think, well, hey, they're the perfect co-borrower, but they have $9,500 in bills, they're not the perfect co-borrower, So we have these conversations as we're helping you say, hey, if you're going to go try to pitch it to somebody, I want you to pitch it to the right person that's going to fit and help make it happen. So,
And that's where you really want to have a good relationship with your community banker. Go seek out the Small Business Development Center. They may have resources, which we're not going to be able to touch on today, that you're not aware of. There may be some non-traditional lending out there or non-traditional cash flow services for you that may say, hey, have you talked to this person about this? And so that's where you really want to build up relationships and talk to other business owners. Other business owners have been in the exact same position that you've been in, and they can give some good advice. And all of us, I think majority of us are going to be at the networking event. So if you guys have any questions and don't feel comfortable right now, and we don't have the time to really address your questions, come seek one of us afterwards, and I'd love to visit more with you. So thank you so much, and we appreciate your time today.